Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1330th edition of Short-Term Trading Live with Oscar Carboni. Good evening, traders. This video is being filmed on Sunday night for trading Sunday through Monday, June 15th, 2015. As we know, futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders. Always use your stops. Let's go look at my technical opinion of what's going to happen next. All right, traders, at livewithoscar.com, you can find me in my live chat room. It's free, so come join me at livewithoscar.com. What you are looking at is the September emini S&P daily bar chart. You are looking at an average, one of my big guns, I like to call it. You'll note that it's rare that we ever get to the average because look how much time you spend on this chart away from it. When you get to it, it bounces off nicely. Hits it, bounces off nicely. Hits it, bounces off not so nicely. On its way back down, the odds are very good that it hits it. So we are not low enough yet in terms of the emini S&P September pricing. Back here, you'll see it actually pierced the average on several occasions. So we're not done yet, but we're moving down into territory where you may find buyers. For now, we absolutely unequivocally are here to say that we are looking at a red omni and that the markets are turning here a bit. I don't love what I see by any means. Friday's action prompted me to do this video and tell you that we've got a red omni in the emini S&P and the NASDAQ, and right now it does not look good. I know we should go down for a couple of days at least. You've got a gap to be filled. If you look back at this chart, there are no gaps. That gap will not exist for very long. Expect the gap to get filled today, tomorrow, the next day. It will get filled. It will not be left open. A gap is when the market opens lower than the previous low and drops even lower, leaving this gap that you'd find right in between these two lines. You've got the gap right here. A market like the S&P almost never leaves a gap on the chart, so expect this gap to be filled. There's your emini S&P for trading on June 15th, 2015. Next we will look at is the NASDAQ for trading on June 15th. And you'll note that it's reached the OTAPMA, or the Omni Trading Academy's proprietary moving average, right? Look at this. So you would think, this should be an immediate buy. We are at Omni Trading Academy's proprietary moving average. But not just yet, traders. Let's let the market tell us it's going to bottom. You know why? Because on this occasion, it pierced the average by a great deal. It looks like nothing, but that's a lot of movement. Here it held the average, but here it pierced the average by a great deal. Here it pierces the average. Here it pierces the average 3 times, big time. Here a major piercing of the average. So we are not done yet based on the terms of the NASDAQ drop. Looking back here, once again, you've pierced the average. You didn't just stop at it. So that is what should happen up here. We should pierce the average. I think more downside comes. Once again, very rare to find a gap on your NASDAQ daily chart. This is a 24-hour chart, so it's rare that it pulls a gap when it opens. But there is a small gap from here. Let's just bring this in focus. There is a very small gap from here to here. It is a gap, albeit whether you want to admit it or not, that is a gap. And that too should get filled before more downside action takes place. But there is no guarantee that gaps get filled before the action. Maybe what happens in this case is the market dumps lower, does whatever it wants to do down here. Let's make that a little deeper for you. Maybe the market does whatever it wants to do down here and then turns around, heads back up, and then finally fills the gap. That could be. We don't know. There's no special rule on gap fills, except for that we see none in the background. The odds are good there'll be no gap fill here. So expect that gap to be filled even if we do end up lower. So that's your NASDAQ in your S&P. NASDAQ here, we just seen the S&P a moment ago. Let's go look at the gold, another interesting market. Here's your gold chart, traders. I have shown this chart to you many, many times. Come to livewithoscar.com and see it for yourselves. Left shoulder, head, right shoulder, one of my OMNI averages. The market fails at that average and puts in what we call the head. Comes back down on the right shoulder. It stops dead cold at the average and finishes forming the shoulder. See that? It stops cold at the average and finishes forming the shoulder by touching the average again. Interesting. Then it dumps, forms the shoulder. After it dumps, it rallies up to what I like to call an Oscarism, the failed head test. Comes up to test the head of the head and shoulders. It fails and goes into a bear flag, which creates a secondary bear flag. Interesting, on the second bear flag, you had a one-day breach of the top line of the flag, and then down you went. Here you had a one-day breach. You got back in the flag. I don't think gold goes anywhere but gyrates inside of this flag before finally heading down, which is what bear flags usually lead into. Once again, if you don't think so, this bear flag led into that drop. See these three bars? This bear flag gave you that drop, okay? And that's there, you can see it. This bear flag up here gave us this drop. Boom, one big flat bar, then the next one. So bear flags do work. Do they always work? Well, you know, if everything that we did always worked, we'd all be traders, all of us rich, all of us on vacation, and no one would have a job. So no, they don't always do what we expect, but repetitive patterns will usually tend to repeat. So in the end, the gold should end up down here, even if in fact it runs up to hit the top of this red line up here and then come back down. So that's what we're expecting in gold. I showed you what we were expecting in the S&P and the NASDAQ. Come on down to livewithoscar.com and join us and see how we handle these trades. All right, traders, always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Traders, thank you so much for tuning in, and I will see you all at livewithoscar.com.